Jeuse Meuse is president of Belmont Partners, and he joins us from Hong Kong. Now, Belmont is a financial consulting company that advises on reverse mergers. Hey, Mark Morbius of Templeton says this is the best time to find bargains. Others are more cautious, saying better to stay on the sidelines. Valuations are likely to fall further. Where do you stand?
It's a great time to buy as far as we're concerned. We're certainly deploying a lot more of our capital and resources into the Chinese market. And it's just hard to argue with the overall macroeconomic trends. People were talking about oil going up yesterday by $25 because of the weakness in the dollar, but nobody was talking about the fact that oil imports year over year were up 11% in August. I mean, I think that's an economy that's still growing.
If you talk about economic trends, we're also looking at a global slowdown, and China is not spared from that.
Absolutely, but I think they're probably the most prepared for that. You know, there was the belief, and still is, a lot of people talking about that the U.S. led us into the global recession, that they're going to lead us out. I'm not sure that's the case. I think the impact of the Chinese economy continuing to grow, supporting other countries, is what could possibly lead us out.
But if you take a look at what's happening in China, the CSI 300 plunging a whopping 60% this year, the second worst performer, as I've been mentioning throughout the morning. Why are you still convinced that the market and the economy are resilient still, and people don't seem convinced?
So, of course, what goes up must come down. The Chinese market has seen an incredible amount of growth over the last couple of years. So it would only be logical during this global recession that there is going to be a pullback. But again, I go back to our view, which is a little bit longer term. We're not here to invest today for tomorrow or for next week or next month. But over the next couple of years, it's hard to find another place on the globe that we think is going to have as much upside as the Chinese market's going to have. And I think as the Chinese market also becomes a bit more transparent, which they're trying to create that for their equities, it's only going to create a better buying opportunity.
Is it going to be a choppy ride for China as well as other emerging markets?
I'm sorry, say again?
Will it be a choppy ride?
It will absolutely be volatile. I mean, I think what we've experienced is volatile, and we'll continue to do so, especially as the U.S. market continues to be volatile. And I don't see the U.S. market getting out of this choppy term for any time soon. There's so much fear and anxiety in that marketplace. But I think longer term, what that's going to mean is that the investor's dollar, which used to go to the U.S. as a safe haven, is also going to be looking for other places to be deployed, which is going to be China. I think China is going to be the competition for investment that the U.S. is currently getting today.
What exactly in China would you buy?
So we believe a lot in kind of the Warren Buffett style, the idea of simple to understand businesses that have good management, that have good profitability. We also like the retail sector. If you can fathom the idea that there are probably 500, 600, 700 million Chinese nationals who are not yet consumers, who live in rural areas, who don't have the economic income level yet to be able to consume goods and services, but that they will be coming online over the next 10 to 20 years. That's twice the size of the U.S. So retail, domestic retail companies that are focused on selling goods in China, to us makes a lot of sense.
All right, Joseph, thanks for the insights. Jeuse Meuse, Belmont Partners president.